Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how you going? Welcome to the podcast. Thanks for joining us. It's on everyone's lips at the moment, what's going to happen with property, and no one really too sure about what's happening. One of the challenges I have is that most people think I know a lot about property, but what I do know a lot about is that I know how to ask questions to people who are in property or investing in property, but I don't necessarily know all the answers myself. And much like you, if you're tuning into this, it's a journey for all of us as we try and make the best decisions, most informed decisions we can as property investors. And one of our mantras here at the corporate level of Momentum Media, who's the brand or the business behind Smart Property Investment, is #BeBetterInformed. So we can all be more informed. I'm fortunate that I get to be informed by having discussions with property investors and people that work within property right across the nation. So that's part of the mechanisms that I use to be better at what I do. But rest assured, I can't give any property advice, because whenever anyone asks me what they should be doing, I normally say, go and speak to your accountant, go and speak to a mortgage broker, go and speak to a property strategist, go and speak to a buyer's agent. These are people who do it day in, day out. You got to pay them some bucks to help you out, but you should be considering that. That's what the best investors are doing, whether they've been in the game for many, many years and have got large property portfolios, or whether they're relatively new to property investing. I find in my conversations with property investors, this is the one identifying trait of successful investors, is that they're open for education and always challenging their ideas. And I think we're going to have a good chat today with someone who definitely falls within that bucket, John Afendoulis, recording from lockdown in Melbourne. John, how you going?
G'day, guys. Hey, g'day, Phil. Great to be here.
So where in Melbourne are you based, mate?
Based in Glenroy, so northern suburbs of Melbourne.
I have a property in Glenroy.
Oh, nice.
Yes. I can't remember the name of the street. But anecdotally, I was chatting with someone yesterday who said, we're in the same block as what he is, John. I think there's like 5 sort of townhouses in this block. And we bought these properties for 350 or 360 grand. And he said he just got a bank valuation on that same property for 575,000. So I was pretty happy. I just made myself a couple of $100,000 on paper.
That's amazing. Yeah.
Right. What's going on in Glenroy at the moment? How's lockdown cheating you?
Yeah, look, it's a bit of a tricky time. Obviously, I work in the fitness industry, so my gyms are being closed. So, yeah, just getting through the day. There is some admin sort of stuff to do, but it's definitely giving me a lot of time to focus on my property investment, giving me time to, get educated, work out what I'm good at, what I'm not good at. So, yeah, I'm just trying to make sort of the best out of a pretty bad situation.
Yeah, and I hear there's at least a pathway out now for Melburnians, whether or not they agree with the Premier Andrew's strategy. I don't know, you're nodding and smiling there.
Yeah, look, there's definitely a lot of angst towards the Premier at the moment, or against the Premier. I don't want to get too political on a property investment show, but I don't think it'll last much longer. A lot of Victorians want a different route. So, yeah, hopefully things will change in the short term.
So you're a small business person, you run gyms, is that right?
Yeah, so I used to run my own personal training business throughout my 20s. So now I've transitioned over into management of gyms, and my intention is to open up my own gym, sometime soon. But in the short term, I've found a passion for property, and I've sort of gone down that property investment path.
It's interesting, and you find a lot of property investors do it. And if you speak, John, to some of the best investors in the world, and you only need to sort of pick up the BRW rich list or whatever it is, right? That comes out every single year. It'll say that most people are in some sort of industry, and they're also in property. So you see technology and property, you'll see medical and property, you'll see construction and property, you'll see mining and property. So what you start to see is a theme where people use business as a mechanism for creating cash flow and creating wealth in that regards, and then they transition that wealth into property. So sounds like you're sort of down that same train of thought. We're obviously not talking at the billionaire level here, but maybe one day, let's hope so. Is that the philosophy for you, to make some bucks through business and eventually sort of start generating your own income through business, but property being is where you're going to park that wealth effect, I guess?
Yeah, so I guess the main thing for me is to always sort of love what I do and be passionate about it. And I used to work in the corporate sector when I finished uni. And I just found my heart wasn't in it. So then I transitioned over to the fitness industry, had a passion for that, did reasonably well as a personal trainer. And yeah, now that passion has transferred over to property investment. So yeah, the main goal, like I don't really care about having, a lot of money and driving a Ferrari. It's more about giving me freedom and options. And yeah, I'll be honest, like given the fact I bought 2 properties in a short period of time, that's given me the confidence to know that, okay, I think I can do reasonably well with property investment. And as long as I remain humble and keep educating myself, I really think I can make a good go of it.
Yeah, and we'll chat about those properties in a moment, John. So are you currently employed at the moment? Like, so you're in management of gyms, but gyms are completely closed. Like you can't even go and do a workout, right? Is that correct in Melbourne at the moment?
Yeah, they're all closed. So I am on JobKeeper.
Okay.
And there are some, as I said, like small admin things to do, like respond to emails and marketing and social media. But yeah, the amount of work available is nowhere near what it was when the gyms were actually open.
And do you think when they open gyms back up, you'll just transition back into your full-time job within the gym? Is that the idea?
Yeah, definitely. Yeah.
Okay.
So we've looked at clubs in New South Wales, and as soon as the restrictions were over, gyms really picked up. And I think from a mental perspective as well, the lockdown's tough psychologically, and once gyms open, people want to go there. They want to get that mental release. So we think, the same will happen in Victoria.
And you look like a sort of a fit big bloke. You're still sort of doing anything? You're staying away from the pies and the booze during lockdown and trying to keep a bit fit?
Not really, to be honest with you. I probably had too many beers over the last couple of weeks. But no, look, I'm still training, doing a lot more cardio than weight-based stuff. So I'm taking on a bit of weight. But yeah, look, I do miss smashing that barbell when the gyms are open. So I definitely get back to it.
Can you give me a 5-minute workout for every property investor every single morning to make sure they're in peak fitness so they can mentally buy the best properties? We've never done this before. Here we go.
All right, here we go. So yeah, I think first thing when you get up in the morning, have a stretch. In particular, you want to stretch the bum, the glute muscle, and those hamstrings. And yeah, start with, really basic stuff. Do maybe 10 or 15 push-ups, stabilize that core, maybe do a plank. But I think the main thing for any property investor is to also work the mind as well. So like a 5-minute meditation session after a workout, and yeah, they should be ready to go. There
you go, mate. Well, this could be your future training for property investors. Get their heart, mind, soul, and body to get the best decision makers. That's funny, but hey, John, we're going to go a quick break. When we come back, let's get in your portfolio. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member, and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with John Afandoulis. That's a good Greek name in the second biggest city of Greeks in the world, Melbourne. You're still half of the population down there, you Greeks?
Yeah. I've got 30 cousins in Melbourne, so we definitely love living here.
Yeah, no, it's not a bad place. I know the Greeks are pretty family orientated, like Italians. It must be hard not getting together on a Sunday with family and eating way too much food and all that sort of stuff.
Yeah, definitely is. But I guess the positive out of that is I'm not eating my mum's sort of greasy food, so I'm not packing on as much weight.
I guess that's pretty dangerous. So, hey, let's have a chat about property. So you're relatively new to investing, John. Can you give me some sense of when did you buy your first property? Just give us like a timestamp of where you're at in that journey.
Yeah, so I bought my first property in March of this year.
Okay.
All right, and that was in Ballarat. And yeah, it was a bit of a story because I was looking to open up my own gym, but I didn't have enough funds to do that. So then, made the transition to property investment. Yeah, as I said, bought a little unit in Ballarat. And at the time, I wasn't too confident with what I was doing. But anyway, we bought it for about $200,000. I dropped about $60,000 on the deposit. And interestingly enough, I got the bank to value it in April, and they valued it at $260,000 when I bought it for $200,000.
Oh, wow. So hang on. So 260 1 month later.
Yeah.
So you've either bought really well or the market's gone crazy. Which one was it?
I think I bought really well.
Well, and you have one more property now in addition to this Ballarat property. Is that correct?
Yeah, that's right. Yeah. Well, just on that quickly, once I realized we had a decent amount of equity in the Ballarat property, I thought to myself, there's a good pool of equity there. I want that to actually work for me rather than just sitting there. And given that we are in lockdown, I thought, there are opportunities that are available that probably won't be available again. So I extracted the equity and bought a property up in Brisbane.
Okay.
Which is a 3-bedroom in Bundall. so northern
Bundall.
suburb. It's near Zillamere, I think it is, or Tegum,
Okay.
that way.
All right. I have to quickly Google where Bundall is. So I'm a really visual sort of person. I need to geographically Bundall. I'm just looking this up. Bundall, Queensland. Here we go. You can go to smartpropertyinvestment.com.au and you can get all these numbers as well. So that's now in the portfolio, or is it about to settle? What's the status on that?
Yes, it's about to settle next week.
Okay. That's cool. And so that'll be the second property.
Yeah, well, my partner does have a property that we live in. So
Okay.
I guess if we include that, total of 3 properties in the portfolio.
Okay, cool. How much you pay for the 3-bedder in Bundall?
We've got that for low 300,
Okay.
right? And the good thing about that property is that the house itself does need a little bit of work, but I see that as a positive in the sense that I can manufacture my own equity in the short term.
So you moved pretty quickly on that. So you bought your place in Ballarat, and we'll get to why you bought that particular property in a moment, but you bought it for $200,000 in March. You got it valued at $260 in April. And when did you actually extract that money out? How much did you extract out in order to get a deposit together for the Bundall property? You must have tipped in a little bit more money as well.
Yes, we extracted 75,000. We did go above the 80%, so we did incur the LMI. But that then enabled us to put a 20% deposit on the Brisbane property and avoid LMI on that property. So it sort of did balance out.
Okay. And when did you actually do that process? Was that in like May time, was it, to actually extract those funds?
That would have been late June.
Late June. But you've moved pretty quickly. So you've bought this place in Bundall in Queensland in lockdown. So you haven't been able to see it. How did you find it? Like, why that particular place?
Yeah, so I spent a lot of time doing research. Obviously, I jump on realestate.com, Domain, got myself a subscription to CoreLogic. And I thought to myself, well, I am in lockdown. I do live in Melbourne, but that doesn't necessarily mandate that I should buy in Melbourne, especially given that Melbourne prices are pretty high. And yeah, just did a search of properties in Brisbane and in Sydney. And my main goal was to purchase a house with a decent block of land and a property where I can manufacture equity in the short to medium term. And yeah, came across this property. The vendors were pretty keen on selling for their own personal reasons. So I saw an opportunity there. And obviously I did my due diligence. The bank valued it, about 50K more than what we purchased it for, or what I intended to purchase it for. So I thought, it ticks all the boxes. Let's just run with it.
It sounds like good buying. So it was currently rented, was it? So that the people you bought buying it off, or when you settle, are investors?
No, so the people living there were a married couple.
Okay.
So they were looking to get out of the property. But one of the owners is actually going to live there as well, hopefully.
Okay. So they'll rent it subsequent to you acquiring it, which is pretty. Well, what sort of rental return we get on? What are the agents up there reckon?
So we've got it appraised between 300 and 320 a week.
Okay. How will the numbers look once you sort of put it against the purchase price in terms of gearing or yield on it?
Yeah, good. So the yield will be just over 5%,
Okay.
which isn't too bad. We are using an interest-only loan.
Okay.
That's going to help with the holding costs. And in terms of numbers, will be about $120 or so up each week once we take care of, management fees and, all those sort of costs as well.
So it's not bad going in. And what's your sort of view towards capital growth prospects for Bundall? Is what's happened there sort of the last couple of years? Has it got pretty steady growth, or is it flatlining?
Yeah, so it's had pretty good growth over the last 2 or 3 years. The median sort of household price is about $550, $575. And again, I've looked at the percentage of owners to renters. That's healthy. I've looked at average household income, so all the usual statistics. And it does have, I think, capital growth potential. But the biggest thing for me is, of course, we've got to focus on the market. The market's important, and we've got to ask the question whether we'll get capital growth or not. But the main thing for me is being able to manufacture that growth. So whether the market's going up or down, at least I have some control over what my property is worth.
So it sounds like you've thought a lot about this. You haven't just jumped into investing, and we'll have a discussion around how you've sort of built up your knowledge base so you can make these decisions. I just want to get back to the Ballarat property, which, the argument being that you've bought it considerably under market value. If you got a 260 valuation on a 200 purchase price a month later, that's sort of stuff that will prick a lot of people's ears. They go, wow, like, how did you do that? Why Ballarat for your first property? I imagine it's price-based in some degree, but why a unit? Why there? Why there now? How did you find it? What was the process to buying it?
So I chose Ballarat over Melbourne for a few different reasons. Obviously, it's a lot cheaper, it's a lot more affordable, but I think Ballarat also has some good economic indicators, and it's definitely seen some growth over the last sort of 3 to 5 years. Why particular property for $200,000 was being a first-time investor I thought, it's a cheap property. Maybe it'll be, it's definitely within my budget. I won't be stretching my cash flows, excessively. So let's sort of jump into it. But prior to buying it, I did use a few different valuation tools. So I had one tool saying it's worth, 260, one tool saying it's worth 240, another tool saying it's worth, 220. So I thought, okay, worst case scenario, if I buy at 200 and it's worth only say 220, well, there's 20K of equity right from day one, worst case scenario. But thankfully enough, my bank didn't, value it at a bit more than that, which really enabled me to move straight into that second property.
And did you buy at auction or private treaty? How did that work?
Private treaty.
Private treaty. So did you see it listed and did you call up the agent and go, hey, I want to buy this, I'll give you 200 grand for it? What was the negotiation process like? Yeah,
so we negotiated for a good sort of, 2 to 3 weeks. Of course, the vendor start off a bit higher at 240, 230. And then, if you look at the listing, it's been on there for 1 or 2 months. But again, like the fact that it's been there on the wall, been on sale for a long time should be a warning sign. And yeah, the property itself does need a bit of work. But again, the fact that I can manufacture that equity is what I'm looking for. Anyway, we started negotiating with the vendor, eventually got down to 200. And I said, look, final offer, take it or leave it. If not, then, see you later sort of thing. And yeah, same idea. The vendor was in a rush to sell and they accepted my offer.
That sounds like good buying. So you got a valuation 60 grand over what you pay for it. So 60 grand on 200 grand is a big percentage, right? Like, that you've done well there. And you said it requires some work. Do you think that, what sort of work does it require? Like just painting and lights and that sort of thing?
Yeah, look, it does need a bit of a paint job. Probably a new kitchen in the next 2 to 3 years, updating the bathroom, so stuff that's more cosmetic rather than structural. If the defects were structural, I would have walked away from day one.
Yeah. And do you think if you do that work, it's going to change the valuation of it that much? Is the purpose to try and manufacture equity extract again, or is it more about trying to give it a bit of a makeover to attract more rent or a different type of tenant?
Yes, I think with this particular property, I don't think we'll manufacture that much equity, but it's more about getting that rental appraisal up and making it more attractive to tenants.
And is it a big block, small block, red brick, blonde brick? What's the place like?
The block of land's 100 square meters.
Okay.
So it's super, super tiny. But yeah, look, it's it's in an area where vacancy rates are really low. And yeah, we haven't had an issue in renting it out or finding a tenant.
That's good. And for those listeners who aren't from Melbourne or Victoria, Ballarat's probably, Ballarat bigger than Bendigo, but they're about the same sort of size. It's one of the big, outside of Geelong, it's probably one of the biggest regional towns.
Yeah, I think it's a little bit bigger than Bendigo, but definitely a lot smaller than Geelong, I think.
Yeah, it's a lot smaller. But yeah, so think Orange or Dubbo if you're from New South Wales for a comparative on that. So, John, we'll go to another break. When we come back, I want to work out what you're going to do with all this property as you move forward. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with John Afendoulis. What's the vision, mate? Are you going to stop at 2? You're going to keep pushing? I could tell by the smirk you've got there on your face that this is just the beginning. What's the grand plan?
Yeah, look, I definitely want to keep pushing. Yeah, as I said, I've got this, passion for property investment, and I think I've got a good sort of head for it. Yeah, keep growing, keep buying properties. But the main thing for me is just to keep educating myself and always recognizing that, there's always a lot to learn.
So strategically, is this going to be a buy and hold type scenario, or are you, going to start developing or flipping properties or, doing something else creative? What's the sort of base strategy you're going to follow? Yeah,
I think for the next 5 years, I want to purchase at least 2 more properties. And then beyond that 5-year period, get into subdivisions or major renovations. So, look, I do have a bit of a plan in place, but the future does always change. But at the very minimum, I know that I do want to get at least 2 more properties within the next sort of 5 years.
Okay, and you don't know where they will be. You've got any particular look at diversifying in New South Wales, or what's the thoughts?
Yeah, look, I definitely want to keep diversifying. Love to buy something in New South Wales or even buy another property here in Melbourne. I know my partner wants us to get a bigger house as well, so that could be on the cards. But look, ideally, a couple of properties in each state. Good way to diversify and make a bit of money.
So do you need to wait until this lockdown stops so you can start, generating a few more bucks in the back pocket? I imagine JobKeeper doesn't leave much left after every single fortnight after you pay your expenses and stuff. You're wed to these properties going up in value so you can realise the equity out of it to raise the deposit. But hey, you're sort of saving and doing all that sort of thing as well.
Yeah, well, I guess in some ways I'm pretty fortunate. Like my partner and I live together. We contribute equally for everything. So that's made things a bit easier. Yeah, definitely once, things go back to normal, I'll be able to save a lot more. And yeah, because obviously right now we can't really, do much. But I guess in terms of also lending as well, I'll probably have to explore, the mid-tier lenders as well, because my current 2 loans are with one of the big 4.
Okay.
So I do want to get out of that mentality of, just go to one of the big 4 banks and look to see what other products I can leverage.
When you look at the relationship with your partner, I don't want to get into anything to do with that other than who's the driver of property investment as a wealth creation strategy or providing for a better future? Is it you?
That's 100% me, yeah.
It's 100% you, is it?
She's very supportive. She's definitely on board, but I'm the one, up at 2 a.m. doing all the numbers and researching. So, but yeah, she's very supportive.
And as you think that's cool, she's going, okay, go for it. Like, she's happy for you to take the mantle, because normally it's the other way around. Normally the bloke's just the passenger's going, oh, whatever. It's not normally both people, irrespective of what the relationship looks like. Because normally you've got one driver and someone who's supportive. But yeah, I was just interested how it worked.
She's but definitely both on board. Sometimes she does get annoyed when I talk about property investment at 2 a.m. in the morning. She just wants to sleep. But yeah, other than that, she's pretty happy.
Have you gone getting finance and stuff? Do you do it yourself directly to a bank?
Yeah, so both loans are under my name, my partner's name. So obviously that's made it a lot easier, to become eligible for pre-approval. But yeah, I just went to my bank and said, I'm looking to do this. They ran all the numbers. They looked at our expenses. And luckily, I've always been pretty good at saving. So I've always had a substantial deposit base ready to take advantage of. And yeah, they said, no worries, we'll give you approval. Even with the second property as well, I was a bit uncertain due to JobKeeper. But again, because it's my name and my partner's, income was more than sufficient. And they gave us pre-approval and off we went.
Did they ask if you were on JobKeeper as part of that lending process?
Yeah.
Yeah. Is your partner on JobKeeper?
No. So luckily, she works for the government. I think we're both on JobKeeper, forget it. No chance.
Yeah, that's good. Someone in government, it's always nice and employment. And you sort of spoke about education. How long have you been sort of preparing yourself, or how have you been preparing yourself? It's like fitness, right? You don't become fit overnight. It takes time and energy and effort and dedication. And a lot of it sucks as well, if you want to use that same analogy. But how long have you been or where did you start thinking about, hey, I need to get better educated on property? And how'd you go through shaping your thoughts towards it or getting those skills you need in order to do it effectively?
Well, to be honest, it probably started last year. I was pretty close to opening up my own gym. And I was literally 20 or 30K shy of what was needed, to actually build it. So look, obviously I was a bit disappointed, but, I wasn't going to let that hold me down. I thought, well, okay, we need another vehicle to generate a bit of wealth or a bit of security in the future. And I thought, let's try property investment. But I guess with property, the thing that I like about it now is that it's a very tangible sort of asset. You can feel it, you can touch it, you can smell it, which I think makes it a bit more approachable. And it was really fun. I think it was in January or February of this year. I had this light bulb moment when I said, okay, to purchase a property, you need 20% deposit, in some cases 5%. But that really small deposit entitles you to 100% of the capital gains and 100% of the rental income, which is very unique to property. Like you won't get that if you buy a share. You got to buy the whole share, to get ownership over its increase in value and dividends. So I'm like, all right, this is somewhat unique. And yeah, once I started researching, I started reading a lot more books, and I'm like, well, you know what? This is exciting. Yeah, there's some groundwork that needs to be done, which, running numbers in spreadsheets isn't fun for a lot of people. But for me, being able to take a very, at times, fearful concept of, having a 30-year mortgage and just boiling it down to a simple spreadsheet and looking at it rationally and in terms of numbers, to me, I think that's a beautiful thing.
So for our listeners there who heard that know what he's talking about, you know exactly what the word is. And for those listeners who are just going, oh, okay, that sounds like an interesting concept, I can crystallize it in one word. It's called leverage. And that is one of the real benefits of investing in property, to what John said, is that you can control an asset and get the upside benefit of capital growth and the upside benefit of income. The detriment to that is that you get the downside negative benefit of a reduction in capital and, you got both sides of the equation, but you can get access to that for 20% of the actual cost of that asset. So that is leverage, and that is one of the great enablers for property investors as an asset class to get stuck into versus a whole bunch of other things. So if you're not familiar with that term and you're relatively new to property investment, my recommendation to you would be educate yourself around it, understand leverage, because leverage will open your mind and leverage will give you a true understanding of how you can strategically go about building wealth through property. But you need to make sure your decisions are right and they're very informed decisions. You spoke about reading books. What books have you read or would you recommend, John?
Yes, I read quite a few. One of the first was by Michael Yardney,
okay,
which I know he's got a rival podcast, but I think yours is a lot better.
Oh, well, thank you. No, look, yeah, Michael does some good stuff.
Yeah, I've read heaps of books. Actually, one I'm reading at the moment is called Rules of the Lending Game.
Okay.
It's by Stuart Wimers.
Okay.
And yeah, the book's really interesting because it takes you through the basics of what it means to actually get a loan. And that's, I think, something that most investors don't have at the forefront of their mind. It's normally about what am I buying, where am I buying, what's the capital growth projections, and then thinking about the loan structure and all that is secondary. So yeah, look, I think getting your hands on as much information as possible, whether it's through podcasts, through books, or even, catching up with other property investors, having a coffee. Obviously not in Melbourne in lockdown, but once that's over.
Yeah, true. And, there's a good community around property investors who are all happy to share ideas, strategy. You're obviously listening to the Smart Property Investment Show. How did you find this podcast? Did you just stumble across it one day?
Yeah, I just jumped into my iPhone, typed in property investment, and yours was one of the first ones that came up. And just started listening to it. The podcasts that really engaged me were the ones where you talk to other investors. And there's actually one interesting one where you spoke to Arjun Paliwal.
Okay, Arjun. Yeah, how you going? If you're Arjun, you probably listen to this. How you going?
And it's funny, he and I have spoken a few times over Facebook as well. And yeah, I feel as though, your podcast really has some awesome ideas. And for someone like me who's just starting out, it has a wealth of knowledge.
Yeah, that's good. It's we're very fortunate now that access to property information is so much more accessible than what it was even a decade ago. But back in the day, when we kicked off Smart Property Investment, everything was around expos and seminars. And, there's some good seminars around. There was also a lot of not so good ones around where essentially it was just people flogging property from a stage. So that's bad stuff. So thankfully now it's a lot more democratized. Information around property investment is a lot of, I like to think, informed, unbiased advice. At least that's what drives us here on Smart Property Investment. But that's a good story, John. It sounds like you're doing all the right things. And a lot of people look for shortcuts in property investment. You've invested in being responsible for your decision making through education. A lot of people try and just skip that bit. And then only the people who get sold some property from some spruik on a stage, right, who end up blowing all their dough and have a bad experience around it. So success leaves clues, mate. And if you're not willing to put in the hard work, you're probably never going to be a good property investor. So you reckon another couple of properties in 5 years. How long do you reckon you need for the next one to get ready?
Look, it depends on how much equity we can extract from the Brisbane property, but at least 12 to 18 months. That will be a healthy period of time to generate some more savings as well. But for me, it's not just about, buying a property, it's about buying the right one. So even if 18 months have passed and, I'm not just going to, buy a property just because that 18 months deadline has passed.
Yeah, don't want to make rush decisions. And sort of thinking back of your journey so far, would you do anything different? Any sort of key mistakes you've made so far that you like to share?
Oh, that's a good question. Look, I think I did buy my first property in Ballarat a little bit too hastily. And I think in some ways I was fortunate that the bank valued it more than what we bought it for. I guess the other thing as well, consider, talking to other property investors, those who have done what you're trying to do, because I don't really have anyone, in my sphere that's done property investment. So I was pretty much alone in that sense. Yeah.
Do you feel lucky, the fact that you didn't buy that gym back late last year?
Oh, dude. Man. Yeah. I think if I did buy that gym, we wouldn't be talking right now.
Yeah. Imagine sliding doors sort of stuff, right? Some of the best gifts come badly wrapped, mate. You're probably at that point in time going, oh, this is the dream I really wanted. But in hindsight, sometimes you've got to acknowledge when you are a little bit lucky.
Yeah, it's really crazy, mate, because I think we're close to settling on the gym. And this was a month prior to coronavirus rearing its head. So if things had been even slightly different, I could have bought a business, as soon as the pandemic started and it wouldn't be in the best position. So I'm definitely thankful.
So it was a pre-existing operation that you were just buying, like a business where you so a fitted out gym with all the membership base already there?
Oh, look, it's a bit of a story to it. I was going with a particular franchise, and their role was to find existing gyms throughout Victoria that could be worthy of us taking over and rebranding. And they found a few sites, and one was really, really good. Cash flows and the financials stacked up. But yeah, it just came down to not having enough funds.
Wow. Did someone buy it? Do you know?
I don't know.
Have you driven past and just gone, oh, God. Well, good one, mate. Well, let us know when you get your next property, mate. When you start that journey, it might be 18 months, 2 years, whatever. You never know what happens. Get in touch and connect. But yeah, thanks for reaching out and putting your hand up to come up on the show. These are the chats that I most enjoy. Property investors who are property investors. They're not someone who is a property investor who's about to become a buyer's agent or something or other. Well, like true, raw, real property investors, John. So best of luck, mate. You sound like you're doing all right. So keep the spirit up in lockdown. Keep doing those squats and planks and push-ups and all that other stuff.
100%. Thanks, Phil. It's been great chatting,
mate. We'll chat again soon. I hope you enjoyed that, everyone. Hey, come on, have a chat with us on the show. It's pretty easy, isn't it, John? Just get in touch. It's not a hard thing doing a podcast, is it?
No, it's awesome. Just send Phil an email, and if you're sexy enough, we'll say yes.
Yeah, we're a bit desperate today, so that's the reason why you're on the show. But it is easy. You got to email the team, editor@smartpropertyinvestment.com.au. Even send us a direct message, DM through any of the social channels, Smart Property HQ, and we'll get that arranged. We can, irrespective of where you are, we can have a chat with you. We're not wed to anywhere in particular. We can do everything over the interweb. John's in lockdown right now, so it hasn't stopped us doing this. So editor@smartpropertyinvestment.com.au, and please keep those reviews coming on iTunes. I know John's going to do it right now. As soon as he finishes this podcast, he's going to leave us a review. It's just not me. I've mentioned before at Smart Property Investment, I'm the guy that gets all the gravy here, getting to stand behind the microphone and have chats. But it's a big team here of really passionate broadcast professionals who get a real kick out of knowing what we're doing is of value. So if you can leave us a review, I get a real kick out of that. So thank you so much. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.